Hi there.
Hey, Aaron, how's it going?
It's going all right. How are you, Anton?
I am good. Thank you very much for having me.
It's my pleasure. So I'm Aaron Goldman. I lead broad technology at General Atlantic. I've been at the firm 16 years and for many years led fintech and financials and a lot of our digital asset work. And it's my great pleasure to be on this panel here with my friend and partner, Anton Katz. Anton, in lieu of me describing your background, maybe you should take a moment and just introduce yourself to this esteemed audience.
Sounds good. Sounds good. And thank you very much for having me. Those of you who don't know, Aaron and the GA team has been of huge help and led our Series B. So we've been working together for quite some time. And actually, we started working ahead of that, which is really cool. And obviously, a big thanks to the SCB team as well. That's been a Talos investor for quite some time and has been helpful and puts on like a great content in this format as well. My background, so I'm an engineer by training. I have a computer science degree, but I spent the vast majority of my professional career in capital markets. I started at a company called Broadway Technology, which was tiny at the time. That's actually where I met my co-founder and our CTO, Ethan Feldman. Broadway became one of the largest technology provider to the sell side community. We've built institutional trading systems in FX, in treasuries, in fixed income, in future space, primarily for all the largest banks and hedge funds in the world. And then I graduated to be a director of technology for Broadway, and then later on became the head of trading technology division at AQR Capital, which is one of the largest quantitative asset managers in the world. And about 4.5 years ago, Ethan and I decided to start Talos, that initially focused primarily on providing trading capabilities to large institutions, crypto trading capabilities, I should say. So really, like doing a lot of the work that we've done before in capital markets, we kind of focused our efforts here in crypto in a belief 4.5 years ago that institutions will come and will need to be a part of this asset class. And today, of course, Talos is a much wider company. We support the entire trade lifecycle. I'm happy to get into that, but that's kind of like the path. I spent quite a lot of years building these kind of systems, both on the vendor side, and then I was a client of those kind of systems. And today we focus on really connecting institutions to digital assets.
So talk a little bit maybe about, because I think one of the things that we agreed with in terms of the broader thesis here is institutions coming into the crypto world, that's a necessary part of the ecosystem maturing. And talk a little about what you learned, I think, in the traditional world, what you brought to the crypto world, and really, what role Talos plays in helping institutional clients, I guess, navigate the crypto world. How, what is it that you do that what could they not do if they didn't have Talos?
Yeah, so generally speaking, I'd like to think that we brought a lot of the lessons that we learned in capital markets when building similar systems of similar scale. I'd like to think that those are exactly the lessons that we brought into crypto and now help institutions to connect. When we started building Talos, our focus was primarily really trading, and that really means that we wanted to make sure that institutions that are coming into digital assets have the same kind of environment from a features perspective, from a safety perspective, performance perspective that they use in capital markets to actually trade. And if you really step back for it, you realize that a lot of institutions in capital markets, and actually the vast majority, no longer build themselves the entire infrastructure, especially around trading. And that's been the trend for the past 10, 15 years, right? They rely on vendors like Broadway Technology today, like Talos, to actually provide them those capabilities. And the reason is because that way the institutions can actually focus on things that are core to them, on generating alpha, on providing the right service to their clients. They give us kind of like the benefit of providing them with a system that enjoys the scale of working across multiple customers, enjoys the safety aspects of it. So those are the kind of things that when we set out to build Talos, and we basically said our thesis is that institutions will be involved in crypto, we said we need to provide them with tools that are truly institutional tools that meet that high bar of largest institutions in the world that are coming in and need to trade with an asset class. And so our focus was really that initially. We said, let's solve trading. And that meant connectivity to multiple exchanges, connectivity to OTC desks and dealers, and unifying all that, and providing this kind of like a one access point to that. We built algorithmic trading, multi-dealer system, multi-dealer RFQ systems. We built DMA. We built, electronic connectivity. We built UIs. So really like solving that vertical of if you want to trade crypto in an institutional way, you connect to Talos and you have the entire ecosystem. And then, about 2.5 years ago now, we started branching outwards and thinking not just about the trade, but also about the pre-trade and the post-trade aspect of the ecosystem. Because again, like we saw the demand there. We saw institutions coming in and saying like, okay, I mean, we understand the trading domain, but look, I mean, we have custody. Okay, we need access to custody and we need that side by side with our trading solution. Sometimes we have multiple custodians that we're using, right? So we built connectivity across multiple custodians. We built portfolio tools that our clients can now see all their assets. They can move all their assets across multiple custody solutions across exchanges. We built post-trade tools, so clearing, settlement, transaction cost analysis, and a variety of those. So really, today what we support and where we see the most demand is building these kind of like end-to-end trade lifecycle support systems. So the customer can come in and say, I want to use these 2 custodians, I want to trade with these 5 exchanges, I want to trade with these 3 OTC desks, call it, and I want to settle through those rails, and I want to have my reporting and fund admin done. And so we created this kind of like network that the clients can architect their actual investment lifecycle. And that's, that's the truly institutional way of going and approaching asset classes. Institutions are very different from retail. It's not like you and me, we can just go on an exchange and we can buy an asset and that's the end of it. Institutions have completely different requirements, both from scale and safety, which requires algorithmic execution and all the rest of the tools that I mentioned.
Great, thank you. And one of the things I think that we thought was interesting was really the competitive set is rather limited. If you're an institution and you want to really trade crypto and you don't want to just sort of do it one-off with a single exchange the way a retail consumer would, you really have a limited number of technology providers. And at this point, my sense is you guys have really pulled away. Talk a little bit about the acquisition of D3X and how you're trying to build on that lead that you guys have in the market today. Other features you think that are important to expand to?
Yeah, absolutely. So there's 2 interesting things that you mentioned here. So first of all, a lot of institutions, just like you said, basically decided that, hey, a single destination doesn't make sense. And that's been the case in capital markets for quite some time, right? Capital markets, nobody really depends on a single execution venue or a single solution provider. I mean, you kind of need to diversify and make sure. And so we actually, that was the case in crypto for quite some time for medium to large institutions. But since FTX collapsed, we've seen that across the board where all the institutional players are coming in and saying, look, I mean, we need redundancy. We need to make sure we can meet best X execution. We can meet, best X requirements. And so we've seen a wave of new clients as a result of that. They are basically saying like, hey, I can do one integration to Talos and then I have access to this entire world. D3X is the perfect example of us continue to expanding services to meet the demand of the market. D3X is a phenomenal platform. I mean, Zav and Scott built a really, truly, a machinery that rivals quite a lot of similar machineries that are built in-house, even in capital markets. Even in my seat at AQR, I haven't seen a lot of vendor systems that have done what D3X have completed. And just to give a quick overview, D3X is a portfolio engineering system. It includes pre-trade components of things like portfolio construction, portfolio optimization, tools like rebalancing, tools like back testing, risk attribution. So really what RIAs, SMAs, active or passive managers do, what 401k programs do, what ETFs do, inbound funds, outbound funds, and managing that and rebalancing that. D3X connects really, really nicely to Talos because D3X now provides that system in-house effectively. It provides you with the ability to run your portfolio, to have a portfolio across potentially multiple assets, definitely across multiple instruments, rebalance that with respect to potentially benchmark, trade that, settle that, and then reconcile everything. So what we see is, we we've been actually surprised since the acquisition of the amount of interest that we received across people that are now providing and looking to provide RIA services, SMA services, and the like. So, and that's kind of like what we think is going to be the next wave of adoption into crypto. It's basically the acquisition allows us to open these kind of client segments going forward and bring them to digital assets.
So Anton, you touched on FTX. Let's talk about the environment, right? I mean, I think that there's you know, if I think about what's happened in the past 12 months, both from an institutional standpoint and a retail standpoint, you know, there's been dramatic change. And I think in the US, perhaps because the regulatory environment is even worse, it's been even more pronounced. But a lot of people have left the market. A lot of institutions who were planning to come in have decided not to come in. What are you seeing? Where do you think this goes? Does this, you know, is it? Are you starting to see people come back? Are you starting to continue to see people leave? Like, what's your take on where we are in sort of the cycle of, if we believe there's going to be eventual universal institutional adoption? Like, I think we've got to take a step back, but are we still going backwards? Are we started going forwards? You know, what?
Yeah. So, I mean, look, you're absolutely right. Without a doubt, and there's absolutely no denying it, there's been a change. FTX have caused quite a lot of damage to the ecosystem. There's a silver lining where, you know, like what we're seeing kind of like an establishment of more institutional, more mature tools. There's a lot more focus on risk. But you are correct that there's been quite a lot of buy-side institutions that either pulled back or at least, you know, like slowed down some of the adoption. I do think that we are kind of, you know, like we have reached the bottom of that market. You know, it's taken about 6 months, a little bit more than 6 months to unravel. And by the way, the impact also been on the regulatory side. And in the United States, it's been a very serious impact, right? That the lack of regulatory uncertainty continues, you know, providing ambiguity into the sector. So a lot of people don't know how they're moving forward. Having said that, you know, like what we have seen that is on the positive. One is that there's definitely flight to quality. So a lot of people are now saying like, hey, you know, we really need to know who our counterparties are on the other side. How do we vet them? How do we assess risk? What kind of tools do we use? What kind of redundancy do we have in place, right? We have, from our side, from a client side, you know, like Talos have generally two types of customers. We have on one side buy-side institutions, and they're the ones using the platform that I just described, right? The custody, the execution, kind of like the clearing, the settlement, all those tools in one. Half of our clients are actually sell-side providers. We have a white label solution that we provide to our customers, whether it's a single deal or multi-dealer. We allow them to take our solutions to provide trading capabilities or investment capabilities to their customers. So actually, even this year, the majority of the contracts, I would say something like 70% that we've closed were on the sell side, which basically shows you that there is an underlying demand. Does that mean that
some of the people out in the watching this video right now potentially are trading with Talos using a white label solution? They don't even know it's Talos, or you think that still is?
Yeah, that's exactly right.
The sell side are trading with there's still institutional counterparts.
So our sales clients are very diverse. We have institutional brokers, we have retail brokers, and yes, the idea there is that, you know, we provide you the platform. The clients are facing you. They're not facing Talos. Talos is the infrastructure behind the scenes. So yes, to answer your question plainly, there are
some of you sell-side providers out there, or even some of you retail people out there, may be using Talos, and you should be thanking Anton for getting you better execution, lower prices, less slippage, and all this other kind of stuff.
I couldn't have said it better.
But like, are people saying I need better systems? Are people saying I'm reducing my number of counterparties? Are people saying like I don't want to leave assets on exchange? Like what are you seeing? And frankly, are you seeing the institutions, I think, who were more enthusiastic about getting into the business a year ago? Are they just leaving forever? Are they coming back? Are they pausing? You know, like I know you guys, you know, Boney and other big U.S. institutions, a bunch of big international institutions. Is the pace picking up outside of the U.S., inside the U.S.?
Yeah, it's a good question. We haven't seen anybody that's saying that they're leaving and they're not coming back. We have seen some that are saying they're pausing. We have seen some that are saying they continue working, and they're working more behind the scenes in a more institutional way, waiting for some clarity and waiting to come out. Generally speaking, you're also right. There's a difference on the geographical sense. So what we're seeing in APAC and in EMEA, we're actually seeing acceleration now, and that's as of about a month or 2 months ago. We've seen more clarity. The regulators, there's MiCA framework coming out in EMEA. The MAS is moving things forward. Hong Kong is being very thoughtful about this. Just recently, 3 days ago, with the big announcements around retail trading. So without a doubt, we were now seeing a true, movement in those markets. In the United States, still a little bit more conservative, primarily sell-side institutions that are building, because it just takes longer to build on the sell side and to be able to build those kind of tools that will meet the demand. So everybody is on the same page. I think everybody's basically saying it's a when, not an if. This will happen. This will come back. But there is a question of when the meaningful comeback of the crypto environment is going to be.
What are you seeing on your platform in terms of Bitcoin and ETH versus everything else? How much does it become a Bitcoin and ETH world in this environment?
Yeah, it's without a doubt, it used to be a little bit more diversified. So we trade, obviously Talos has global presence. We have clients all over the world. Generally, globally, we trade, at this point, probably around 2,000 different instruments that have been traded through the platform. So, quite a significant sale of assets. Bitcoin and Ethereum, I would say, are at least 40 to 50% of that.
Bitcoin ETH are 40 to 50% now, only 40 to 50.
Yeah, I would say maybe a touch more. I think with stable coins, it's more, but between stable coins and Bitcoin and Ether, yeah, they take they take the kind of like the pie.
And what's going on with liquidity and exchanges? Like, are you seeing, with obviously the FTX going away and Coinbase having the issues they're having in the US and Binance in the US having issues, like, is liquidity becoming even more concentrated?
Yes, we have seen concentration of liquidity. Binance has been a big winner. Coinbase has attracted some liquidity as well, but Binance has been a big winner across the ecosystem. It's natural. There's quite a lot of exchanges that have closed operations. There's also consolidation happening that will continue happening. I mean, this is kind of like where we stand in this cycle. Having said that, we're partnering with a number of exchanges and liquidity providers that are starting operations, and they're a little bit more on the institutional side. So we are also seeing newer ones that can attract the kind of players that are coming in, the more serious players. So I think over the next 6 months, we're going to see a different landscape. There's also a movement between, and kind of like you mentioned it earlier, there's definitely a rethinking of where custody sits with respect to matching engines, right? And some of the issues we've seen around FTX is that, again, this tight partnership between like custody solution and the exchange has brought quite a lot of issues, and forever that's been known, right? It's institutions don't really pre-fund trades. They really don't want to hold assets on any particular destination. So we're seeing an emergence of a prime model, which is a little bit healthier, and it's a little bit more institutional side. So market structure changes as well as a result of all these things, but it takes time.
And how do you think about what are best practices for people who are picking forget about picking a service provider, a technology provider, they're picking a counterparty, they're picking an exchange to trade on. What should people be looking out for in terms of how to conduct risk assessments and are there things that I know that obviously you guys had some issues with FTX as a counterparty. Are there things where you maybe could advise people what to do to avoid pitfalls?
So look, I mean, without a doubt, right? And there's common practices here. So it's two separate questions. When you're talking about counterparties and who you're trading with, honestly, that's our most common questions. When our clients are coming in, we do a lot of work with our clients on that. They're always asking, who should I be trading with, right? And there's you kind of need to think about it from hey, what is the company? What is their track record? What is the balance sheet on that company? Like, how do I do due diligence there? Then you're looking at technology and whether technology can meet your institutional needs. And, we a lot of times actually work with the liquidity providers to make sure that no matter what happens, we can provide a uniform and a high quality environment. And the third one is operational, right? You need to know that you have an operational recourse. So for instance, a very, very simple example of that is, if you are trading with a counterparty and something happens on the technology side with a counterparty, and let's say they didn't report the trade back to you, but you have assumed that you assume that you have not traded, but on their side they have traded. a lot of counterparties in capital markets step away from that trade. They effectively break the trade. In crypto, that's the kind of stuff that you need to know, that that you have a side channel, you have an operational channel that can resolve some of the problems that arise. So when you're picking a counterparty, you really need to think through a bunch of these kind of parameters, and we work with our clients to pick the right counterparties for them all the time. That's the most common exercise that we do. And I know you were asking about vendors, and it's like, I mean, I'm biased, but we take a very, very conservative and serious approach. Like, for instance, we have audit financials from the top four. We have SOC 2 certifications. We have quite a lot of things that not only internally but externally showcase to our customers that Talos is a vendor that meets the institutional bar that we passed, and we have passed every due diligence of any large client that we have onboarded, and we have some of the largest clients in the financial industry.
And as you think about tokenization of other assets, right? So today it's mostly crypto and stablecoins. Is a platform like Talos relevant in a world where people have tokenized real assets?
Yeah, that's our bet, actually. So when we're building Talos, it's true that right now our focus is on crypto, although we already do support FX assets as well, and we have aspirations in other asset classes. But generally speaking, we built Talos because we believe that digital assets are going to make an impact across the entire financial ecosystem and probably beyond that, right? So yes, the way we're building Talos is we're building in digital assets first, not crypto specific. Crypto is the current use case for us. We believe that any digitalization, any tokenization efforts, we pay quite a lot of attention to it. We speak to quite a lot of partners there, and we want to play a very meaningful role in terms of providing the infrastructure for that kind of technology to make the impact that it should make.
And do you see the pace of any of the tokenization stuff picking up? I mean, I know they're or are we still early?
No, look, I mean, it's not an easy thing to do, but there's quite a lot of these initiatives been going on, and now, especially over the past call it 7-8 months, with crypto voices being a little bit more subdued, you can hear a lot more voices around tokenization of real world assets, tokenization of other asset classes. So without a doubt, there's a lot more progress now than there's ever been. But again, as a reminder, to build these systems, it's not a joke. You have to test things, you have to put them in place. There's a lot of choices you need to be made, and there's a lot of partnerships need to be formed. And so we are definitely seeing a lot more progress, and I do think it's accelerating, but it's still going to be a little bit of time before these things actually get to scale.
I saw yesterday, Elon Musk was interviewing Ron DeSantis, and he was talking about debanking, and so there's all this. The U.S. remains, I think, at this point, if you want to be in crypto, it's a very, very hard. If you're in, touching the real financial system at the moment, you are very scared. Assuming that continues for the next, at least a year or two. What's your take on what that means if the U.S. remains frozen? The rest of the world is moving forward. Like, what's your best guess on what happens?
It's not great. Look, I mean, I can tell you already, we're chatting with a lot of liquidity providers that are saying that a lot of their clients are now clients that are effectively just moving their operations overseas. The activity doesn't stop; it just like relocates, and we've seen this in other asset classes when similar things have happened. I truly hope that that's not going to be the case, but from everything that we can tell, EMEA, APAC, LATAM are going to push forward, and they are being very thoughtful about it. And there's quite a lot of pockets that are very progressive in those kind of regions. I really hope that we're going to see a similar effect in the United States at some point. And I really hope that we don't wait 2 years to see that. But look, I mean, yes, we will see progress. The cat is out of the bag. The technology is revolutionary. This will change how financial markets work. And so we will see it. If we have to see it outside of the United States first, that's where we'll see it. And my hope is that the United States will catch up and will play the dominant role that it should play in those kind of markets. The United States has been a big proponent of innovation, but by all means, the great thing that we see is that outside of the United States, especially in APAC, we're seeing a lot of progress, a lot of the right kind of discussion, right kind of frameworks, and it's just moving forward much faster than what we're seeing right now in the United States.
And who's making money in crypto right now? What institutions are making money? Like, who's making money? How are they making money? What are people doing? That's what everyone wants to know. They all want to know how to make money.
It's the $1 billion question, man. I think that there's a couple of providers. I think that there's emerging systems and emerging players that are starting to make reasonable money, providing services that were not provided before. I think that there are there's definitely traders that are making money. Market makers are still making money as far as we can tell. And more and more outside of the United States,
traders still making money.
I mean, Binance is definitely making money.
Binance is making money. We're going to run out of time here. Any parting words for the crowd, Anton? Anything else you'd add?
I think I think we're at a very, very interesting point, and I think it's a little bit of an inflection point right now in the ecosystem. I hope that the institutional investors that are looking at this are looking at like, hey, how can we build this, and how can we build a more reliable system, and how can we go to the next level of maturity in the asset classes that are not shining away from like the asset classes itself. I think that there's a lot for the ecosystem here to offer, and I hope more and more people take part in it. So I think that would be my parting words.
Well,
I would say this though.
Oh, go ahead.
My only other parting words is a big thank you. Is a big thank you.
I was going to say that. You took out the day. I want to say thank you to you.
All right, you do it.
I want to say thank you to you, to SEB, to all the wonderful people who are making this international broadcast possible. And thank you, Anton, to you for doing this, obviously in the evening here in New York.
Thanks, Aaron. Thank you very, very much.